I'm going to put a chart on the screen for each and every one of you, and I'm going to give everyone a few seconds to just take a look. What do you see? And well, what is this chart? So this chart is actually going back to the market correction earlier in the year from February to April. And we know that the S&P dropped from a high down 19% almost in the span of less than 2 months. Since then, the S&P has basically fully recovered, and most sectors individually have also recovered and even outperformed from their bottom lows. If you look at the technology sector specifically, that is the sector that got hit the absolute hardest, being down almost 26% in a span of just a few weeks. But as of June 11th, it's actually up almost 34%. And what does this mean for investors? Well, one of the first things is that it means that investors who may have made quick decisions probably got burned, right? Investors who were patient and were willing to sit out the turbulent times were ultimately rewarded because basically almost every asset class and sector across the board is back to where they were from those lows and even outperformed. There's a few sectors in there. If you're looking at healthcare as a specific example, healthcare is still struggling a bit, but most other sectors have really bounced back and are even at much higher than where they were from the beginning of February when the market started to really take a dip. So we know that investors who are patient and stick to a regimented plan are often rewarded compared to those who don't. And I wanted everyone to take a look at this chart today. In spite of what's going on in the world, we know that inflation is still an issue, and we know that a lot of investors are frustrated with the Fed for not wanting to lower rates sooner. They're still holding on to their higher for longer policy. And unfortunately, we know about all the conflicts going on in the Middle East between Israel and Iran, and our hearts at Vision Retirement go out to everyone overseas dealing with this terrible conflict. But in spite of what's going on across the world and what the Fed is doing, the market overall is still performing really nicely. And it's just a good reminder that having a dedicated plan when it comes to investments is extremely valuable because it helps to remove a lot of the emotion. Any investor that maybe got sucked into all the headlines around recession probably is still down compared to investors that fought through their emotions or ignored their emotions altogether and ignored the headlines and said, I'm going to stick with my plan. I'm going to continue to ride out these turbulent times because the market rewarded those who wait. So again, as a reminder, patience is a virtue, not just in your personal life, but also with your investment strategy.